where we had October VIX settlement today. It settles on the opening print of November S&P 500s. So if you pull up November S&P options right now, you'll see a ton of volume, and most of that volume went up right on the opening bell. They take the traded prices on each line, calls and puts, all the out-of-the-money strikes, and they throw that into the VIX calculation. They come up with our settlement value. And our settlement value today was 2141. A little bit higher than where the future went out last night, which was 2092, and where the cash at 2068. So that means the traded prices, the actual prices, went up a little bit higher than mid-market on those lines. So the print a little bit higher than many people expected. Since then, we've seen the VIX cash move down significantly. It's actually below 20 right now, with a big S&P 500 rally throughout the morning. We're now up 11 points on the S&Ps. We were down about 14.5 yesterday on the close. Yesterday's close was the biggest down day in 2 months, which is interesting because the long-term expectation for the VIX in the 28 range right now would imply that we'd be seeing moves like that more than once a week, a down move like that more than once a week. Only time in 2 months we've had it. So the realized volatility that we've been having over the last couple months has been much, much lower than the expectation of volatility. And that's why you're seeing the near-term VIX futures continue to roll down towards 20. In VIX trading today, we've had much of a similar dynamic as we've had the last couple weeks. People want to buy the December and January 30, 37 1x2 call spreads. Now, perhaps what they see as appealing about these is they're paying about 20 cents on both spreads. And what they see this as it could be quite likely that the VIX moves down into the low 20s, in which case their 20-cent investment would expire worthless. They see as the reason the VIX futures are so high is because of the small possibility of a very explosive move to the upside, into the 40s, into the 50s. And in that case, this strategy would work out very well. So what they're trying to do here is get some upside protection, not pay much for it. And the downside of their strategy is if we settle in between 30 and 45, they come out big losers on this. So they're making a trade here that doesn't cost much if the VIX goes down, costs a lot if the VIX goes up slightly, and provides them a lot of protection if the VIX explodes. This is Jamie Tyrrell with Group 1 Option Monster.